Hello and welcome to Capital Management's weekly Forex Roundup. The currency market remains an exciting place to be as a fundamental shift continues, a shift away from risk aversion to risk on trades, but also a shift, ironically, back to the dollar, one currency at a time. The reason is ostensibly a rise in relative interest rates due currently to cost-push inflation, but later improving global economic growth. A rise that should benefit US and Euro interest rates, hence their currencies, at the expense of traditionally low interest rate bearing currencies such as the yen and the Swiss. The reason the shift isn't uniform is also due to a variety of factors, exogenous shocks such as earthquakes and Middle Eastern instability, hence higher commodity prices, and technical factors such as intervention and of course the flash crash correction. As each of these factors fade, the shift to the dollar and high-yielding non-commodity currencies should accelerate with greater uniformity. One of the last currencies to turn will be the euro, and it's why the dollar index, Dixie, is so misleading. Misleading because of its heavy weighting to the euro. Although the dollar has and is turning, this better-named anti-euro index should make new lows before a major reversal. The sequencing in this dollar reversal then is crucial, essentially low-yielding first. Dollar yen has started and will continue a major reversal later to above 90. Dollar Swiss is similarly ending the first leg of a new uptrend above 93. Cable has topped at our key 164 resistance and should ideally see over 162 before a loss of 159.35 confirms and accelerates the reversal. And the euro is ignoring all of this, still intent on that final spike higher following the 2008 analogy to as high as 146, while the other dollars correct, taking the dollar index to that final new low. Similarly, the commodity currencies Canada and Aussie are close to turning in the shorter term, as are gold and oil, but despite these corrections they will probably remain stable or ratchet further and be the last to turn in a month's time, but when they do, watch out. This clearly highlights some exciting cross-plays, particularly buying the strong such as the euro and selling the weak such as the yen. Having broken to new highs and exceeded our targets, the yen crosses are showing real upside potential. Similarly, euro Swiss appears destined to break 132. And having broken weekly downtrend resistance, euro sterling remains in the early stages of a new uptrend, above 98, but needs to break the 89.40 high first to accelerate. There's something all very familiar about this scenario. It's called economic growth. And now we've had the flash crash out the way in the stock markets, the uptrends there have resumed. And this is where the currencies could be really important. We suspect the weakest currencies will see the biggest stock market gains. So yes, the flash crash analogy only projected a relatively minor correction in the US in the Dow, but the major correction it predicted in the Nikkei is over. So 14,000, yes, but over 20,000 on Nikkei as well, and a chance to regain a lost decade. To find out how to profit from all this and further excitement in the markets this week, follow us on marketvisiontv.com or my colleague Don Haynes or me, Ed Matt, on Twitter. Good luck, and of course, have a great week.